Welcome to Unlayered, the show where we explore next generation blockchains. I'm your host, Saul, alongside my co host here, Dave. And today we're doing a part two of sorts on MetaDAO. Since we last spoke with the creator of MetaDAO, Prophet, who's with us today, and alongside on the MetaDAO side, we have Metanallok. So much has happened in the market, as well as just adoption and interest in MetaDAO. Lots of new proposals, and many are already calling it the most exciting experiment in all of crypto. I think we actually called it that when we first interviewed Prophet, but that has now become consensus, I think, in a lot of ways. And so, Prophet and Metanallok, thank you so much for joining us today.
Thanks for having us.
Yeah, thanks.
So, I think the best way to start this episode is let's catch the listener up on what's happened with MetaDAO since we last spoke.
Yeah. Well, when we last spoke, I guess I think a few proposals, like maybe one or two proposals had happened. And we were starting to see Futarchy play out, but it hadn't really been tested. Like it was only maybe a few, like 50 people per proposal. And definitely not big dollar wise. Like the volume in each markets was not super high. Now we've had 15 proposals on various things. We've kind of come up, we've aligned on a given strategy, which is like building Futarchy-As-A-Service. So we want to expand this to other DAOs. And then, yeah, we had some pretty interesting proposals that I'm sure we'll get into, both interesting in content, but probably more excitingly, interestingly, in like how the proposals played out.
And I think this is one of the most interesting things that I saw recently about MetaDAO. Maybe we can start with this topic, which is Futarchy-As-A-Service. So when we first or last chatted about all this, the concept of a futarchy, which you mentioned was something that brought up by Robin Hanson, like the early 2000s, was more of just this idea, and crypto allowed us in a way to try it out and experiment with it, and we've seen some interesting results from it. That especially you guys, just with the early iterations of MetaDAO, what gave you the confidence that this is something that yes, it works to an extent. We should try to have other DAOs use it. Let's productize that. How did you guys arrive at that conclusion, and how did you see the demand for this come up?
Well, yeah, I think it was seeing we after we run some proposals. I guess with every proposal, your conviction grows, right? Like the first proposal, it was kind of like a science experiment. And now, once you have high volume markets, it starts to become real. Like once people are making real and losing real money in the futarchic markets, it starts to become real. And then, yeah, we had interest from other DAOs in the Solana ecosystem, like some of the prominent ones where they're like, hey, we might want to do this because our governance kind of sucks today. Um, and so, yeah. And so we were like, okay, we were working on this other thing at the time, and we're still kind of working on that, which is this vote market for Saber, where people will trade their governance votes for money. But to have like kind of customers banging down the door, wanting it, uh, wanting to use Futarchy, we're like, okay, we got to do this now. And so, yeah, that's pretty much what we're focused on full time.
And real quickly, let's just walk through a quick example of maybe one of those proposals, or maybe perhaps even one that resonated with a lot of people, just so we can kind of concretely define what we're talking about here.
Sure. Yeah. So, a cool one was Ben Hawkins, who worked for the Solana Foundation, but here he was acting just like as an independent person. He created a proposal to buy $50,000 worth of Meta, which is the native token of MetaDAO. And his proposal was buying it below, it would be buying it below spot price. So I think at the time the spot price was like $60, and he was going to buy it for $30 per Meta if the proposal passed. And so he wanted this proposal to pass because, like, who doesn't want free money, right? Like, who doesn't want to be able to buy stuff for below spot? Uh, and so he spent $250,000 trying to manipulate the markets in his favor. And so specifically, he took that money, or a decent amount of it, and bought in the pass market. So essentially, he was trying to make the market reflect that MetaDAO would be more valuable if the proposal passed. So he placed huge bids in the pass market. And the problem that he ran into was that every time he placed these very high bids, so essentially he was placing a bid that's like, okay, MetaDAO will be worth 2x the current valuation if the proposal passes. Someone else would trade against that because they were like, okay, wait, if the proposal passes, it's probably not going to 2x in value. But if I can sell to him for 2x the value and then buy back later, then I can like either take the money home or 2x my holdings. And so they would sell into his bids. And then the prices basically reflected the idea that no, the DAO would not be more valuable if the proposal passed, and so it didn't pass. And I think that's kind of like it shows that. Well, when I first talk about futarchy with some people, they'll say like, "Oh, this is just voting with money. This is essentially like voting by rich people." But it goes to show that like markets have these natural incentives baked in that prevent manipulation, and are like you're incentivized to find the correct price. And so, yeah, that was pretty cool because it really showed in practice that futarchy is manipulation resistant.
Metanallok is with us. I don't think you weren't with us last time, obviously. Tell us about how you got involved with MetaDAO, what your focus area is, and what you guys have been jamming on these days.
Yeah. Uh, so I went to Breakpoint in Amsterdam and was invited to a crypto aligned dinner, which was a small group of people, which was cool. I appreciated that I was going to get invited to that and sat across from this guy that was talking about short term futures as a currency and how we didn't need currency anymore. And I was intrigued, certainly, by that, and walked with him over to the Jito rap party, or it was an invite party, and we were talking about what he was working on and pitched MetaDAO. So I was really intrigued from the get go, and we stayed in touch, hung out a few times in at Breakpoint, and then came home, and the airdrop was announced, and then the UI was announced for the one of the first proposals. And so I took my airdrop and said, if this is going to work, this will be cool. Let's get some volume on the order book. The token is technically priced at 10,000. There were 10,000 tokens issued. There was $10,000 in the treasury. I don't think that it should trade at the treasury value because this is such a grand experiment. And so put 330 on the books, sell at a dollar. And then realize there's no cancel button on the UI.
Oh no.
So yeah, so started to look around who Dode built the UI in the community that we launched with, and started to look around at that, and then said, you know what, like I got to build the features I want if I'm going to start trading this stuff. So just started to pull the code base and push, and started to integrate with everybody and say like, hey, this is what I'm working on. Hey, this doesn't work. And then that evolved into the trading interface that is currently deployed right now for MetaDAO and Futarchy. And as that grew, the engagement or like it at least was a signal to say like, hey, I want to work on this. I'm really keen on it. I think that one of my biggest things was I've been in crypto for a decade now professionally. And this was cool again.
Mm.
And it harkened back to some of the early conversations with Bitcoiners about microloans and what could we do with Bitcoin and what was possible. And I've always felt that DAOs were DAOs in name only, and they weren't autonomous. They were bot votes, groups of 5 people. It was more like a board of a company than it was a DAO. And to see something that was experimental and see something governed by markets, which I'm very familiar with markets being brutal. They don't care about what you think. It's about what you know. And the, price resolution and data flows and information flows for all that is really exciting to me because market theory makes a lot of sense as a trader. So as we were going along, Prophet invited me to come to Mountain DAO. I had been traveling all the year before all last year, and I was like, I'm done traveling for a year. And I was like, is it really going to be worth it? And so I flew out to Mountain DAO, and then everything kind of exploded once we were out there, and that was really exciting. And people were like, hey, I've got to refresh the UI to get order books updated and like all this stuff that I saw people using it. And I was really engaged with seeing how people were using it. And I kept hearkening back to like, this needs to be a professional tool, not a weekend hobby project. And so I contracted a friend of mine who's been doing UI with me for 7 years. And at Mountain DAO was like, hey, I want to pay you to start working on this. How much time do you have each week? And he was like, I can give you 10 hours. And I was like, cool, I'm buying all of it. And so before even Futarchy was a service, I was like, I want this to be, representative of like a product that I would build and release to people. And then that naturally evolved as people saw the attention and the activity of it. They said, hey, could we deploy this for our governance? Could we do this? And I was like, oh, this is much more interesting for other people too. So maybe we can start to wrap all this stuff together. And that's kind of where we got to today.
I just wanted to add to what he said, because he kind of, so the UI story is kind of interesting because it shows that MetaDAO is still like a very community led and governed project. So the story there was when MetaDAO launched, I, as like the only member of MetaDAO team, had put out a UI. And I'd never written UI before professionally because I've did smart contracts, and before that in Web 2 did like APIs and backend stuff. And so the UI sucked. But within a day, I believe there was a UI for MetaDAO. It was just written by someone else. And then within like a few days, Nallok and a few other people had written on, had like worked on that, and it was way better than the original UI. And like no one asked them to do that, right? They just like did that of their own volition, which I think is, and there was also no incentive. Like no one to this day has been paid on working on that UI. We need to fix that. Like we should, but it was cool to me because it's like, okay, people are actually excited about this. Like this isn't just another project.
Yeah, and just as an observer from the outside, it's definitely looked like a real DAO, not just in name, but like a credible coming together of like-minded folks willing to try and change the world really with something like this. So it's a real grand experiment, and I mean that's the main reason we brought you on for a second time to look into this, because it does feel like one of the most interesting things that's going on in crypto. Maybe just something which Metanallok was referring to, but maybe a problem that seems to have persisted so far is like a lack of liquidity or something like that, because I've been looking through the proposals, and there was a proposal to change it from a CLMM to an AMM, now to Dutch auctions. You mentioned there's only 10,000 tokens. I think the spread is massive. So why are there problems, and why didn't you just do maybe a more traditional token launch with millions of tokens, airdrop to loads of people, and then maybe there'd be more liquidity going around?
Well, the honest answer is I should have. I think that's probably my biggest regret. But I'll tell you my theory, which was, okay, each of these tokens are worth $1 because there's going to be $10,000 in the treasury. And so if I do like very broad distribution, then like no one's going to care because the airdrop is going to be worth like a few pennies.
Mhm.
And so better to do it concentrated to like a few people. And then we'll be able to like have a really tight community form. But I think that the tight community would have formed even if it like people hadn't gotten substantial airdrops. So yeah, if anyone else is listening to this and is considering doing a concentrated airdrop, I would say please don't. Like you will, it's not ideal. It's okay. Like things will be okay. But yeah, it's definitely hurt on the liquidity side. Um and then but we're doing things to address that. So on the spot liquidity side, we'll potentially put some concentrated liquidity there. I mean, that liquidity will naturally come with volume, right? Because like volume is how market makers make their money. And how AMMs make their money, like LPs. So that'll happen. But proposal liquidity is the problem that I'm more focused on, like liquidity in the futarchic markets, which has been okay, better than I expected it was going to be, but still not ideal. So, like to give some reference, I think the last time we looked at the numbers, now like it was like 100K to 500K in volume in each of the proposal markets, right? Something like that.
In aggregate, yeah,
Yeah.
something like that.
Yeah. So that's not terrible. Like it's better than I expected, but still not great. And if you trade in the futarchic markets, you'll see that the slippage or the price impact is really high. And so what we need to do to address that, and what Robin Hanson actually suggested to us, is to use an AMM where essentially you incentivize people to provide liquidity in the futarchic markets. And that is sustainable, unlike a lot of liquidity mining programs, because uh, proposals actually create value for MetaDAO, right? Like the governance process creates value. You could pay managers or you could pay people in futarchic markets. And so it's sustainable to like pay them long term. And so, yeah, that's like what we need to do to address that.
Can you tell us a bit about what that's like? I guess in some ways working with Robin Hanson, the architect of this model here, and is he like pretty engaged with crypto? It sounds like he kind of is.
It's awesome. I don't think he's super engaged with crypto. He didn't know what Solana was. He didn't know what Ethereum was. Uh, but yeah, I mean, it's been amazing to like get very specific advice, like very technical advice on what we should do. Like, for example, he's given a lot of advice on how we should use our TWAP oracle, like how the time weighted average price oracle, like the statistical method it should use. Um, and yeah, that's been great. Like I couldn't, I mean, you can't really ask for better advice about a system other than the person who invented that system. So grateful that we've been able to steal some of his time.
And how's he feeling about seeing his creation actually come to life? Because obviously it just didn't really exist, did it, until MetaDAO came about?
Well, I think that he is excited, but I also think from what I've gathered when I talked to him that he doesn't see what we've seen as new. Uh, like I guess to him, it all makes sense. Like futarchy as an idea, it makes sense, and I kind of share that. Like futarchy isn't just makes sense. And so when I told him, for example, that the markets had resisted manipulation, I was like, oh, yeah, by the way, like we went through this proposal and this person tried to manipulate the markets and futarchy just like naturally resisted. And like it proves that, I mean, it's kind of showing that it's manipulation resistant. He was just like, yeah, I would expect that. And so, yeah, I don't think he sees anything new so far. Hopefully we can demonstrate some behavior that he hasn't thought about. But yeah.
And maybe Metanallok, but have you had any like real extensive discussions with other teams who maybe want to integrate Futarchy? Is there anything you can let us know about? The one that I saw on Twitter suggested, by the way, was OR. You know, this new POW mining thing happening on Solana. I saw someone suggesting it should have, or I think maybe the hard hat Chad saying that it should have a Futarchic governance associated with it.
Yeah.
So yeah, any of those chats happening?
Yeah. So, we're working with FutureDAO right now to get them integrated, and definitely have conversations open, with Or and Hard Hat Chad about it, because he's engaged with it. It's just a matter of, what does it look like? How do we start to integrate that? How quickly can we get those things going? So we are launching with like the current UI with the other DAOs if we can. But we're also charging ahead in our time. The estimated proposal launch, or the launch for the Futarchy-As-A-Service, is May 21st. So that's when the new UI comes out that should be able to cater to multiple DAOs and have everything ready to go there. So in a way, self-service, but also we plan to help onboard other DAOs and have that user experience as well, so that it's not as cumbersome for other people. So I don't know how many people are waiting for that specifically, but stuff is in motion too, just to use the current programs and the current code base for other DAOs as well. I just don't know exactly their timeline, given some sensitivity to TGE. So some of that stuff I'm sure is constrained.
Yeah, I guess what I would say to the listeners, or just anyone, is we probably can't say who, but just DAOs on Solana, DeFi DAOs
I saw recently you guys brought on Colosseum as an investor. Tell us a bit about that. I didn't see that coming, at least in the early days of MetaDAO, but it seems like an elite kind of organization here, steward for a lot of hackathon projects in Solana, has identified the MetaDAO, and maybe the MetaDAO ecosystem broadly, is worthy of an investment. What was kind of how did that come to be? What's their objective with this?
Yeah, so the story was Pantera Capital originally created a proposal to buy Meta, to invest in MetaDAO. And their proposal failed because they set a maximum price that was too low, and the market said that it would be bad for MetaDAO if they let Pantera invest. And so that failed. And then there was the Ben proposal after that, which also failed. And then Colosseum created the third proposal, which I guess third time's the charm. And yeah, they set some good like price parameters and stuff, or at least the market deemed it good enough to pass it. And so yeah, they invested $250,000 into what I would consider like a pre-seed stage startup DAO. And yeah, that's been great. Like, we were just talking to them the other day about like how we're going to structure our compensation, which is obviously like going to be different than most projects. And yeah, they're super helpful.
And so can you give a bit more color on that? So are they starting a separate DAO? Is that what you were suggesting? So a early stage investment DAO using the Futarchic model, or are they using the MetaDAO to invest in other projects, or am I completely wrong?
Oh no, they're invested in MetaDAO. So they like bought Meta tokens from the treasury.
Yeah. So, they committed in the proposal that they wanted to run some tracks with Futarchy and MetaDAO. So that was the other interesting component of the proposal and their engagement with it. It's been really great to communicate with Maddie, Clay, and Nate over there for these things. And once the proposal passed and everything was taken care of, they did a I think they got 20% up front, and then 80% is in a 12-month stream flow vest.
Mhm.
So, once that was set up and done, they reached out and they were like, "Hey, anything you guys need about anything, let us know." So we were able to it's great to have somebody like that in the industry that's aligned with the industry as well. So I'm really, really engaged there and really interested to see how we can start to leverage this, because we've talked about, I don't know if you guys saw the Solana Scribes hackathon,
Yeah.
that prize pool that was also ongoing with all this
Mhm.
interest. So, it'll be interesting to see what people bring to the table when you start to look at these things in a different way. I know that Prophet just brought up TWAP and how we're calculating that, or what other mechanisms are in here that we could start to leverage or use. I think it'll be really, really interesting to have a partner that has like the hackathon track stuff that could really work to the benefit of getting a lot of these experiments that may not necessarily drive the revenue bottom line for MetaDAO, but may be quite interesting to play around with.
So with the idea of maybe bringing projects into MetaDAO, would that be the broad idea?
Yeah, projects or DAOs are solving problems that DAOs face in a very unique way. I know people have started to suggest different ideas on, well, we would like to do this, but maybe there's a way to restrict the people that can trade. Now, that's not exactly the idea behind Futarchy, but if that gets DAOs adopting and playing around with it, I think that that's certainly an interesting experiment to run with a lot of this stuff. I mean, I consider that you can crawl, walk, run with this stuff. So maybe you don't move the treasury over 100% to Futarchy, but you may run one proposal through that has $50,000 associated with it, and you want to see how it works. You want to see how it works within the community. So I think that there's a lot of stuff that DAOs can do that doesn't necessarily mean they're fully onboarded, but they can play around with it and see the effects.
Got it. And sorry, just one quick follow-up, but I've never really seen DAO proposals before for people to buy the tokens, albeit on a sort of 12-month vesting period. Is that because of the lack of liquidity, or is there something else going on here? Why aren't they just buying from the open market?
Yeah, lack of liquidity.
Got it.
That and then you don't if you buy on the open market, you're not necessarily allocating those funds directly to the DAO. Whereas the DAO was the holder of the tokens. In this case, the treasury had it. And if you want to transfer USDC directly to the treasury, this would be the mechanism to do so.
So why don't other DAOs do that? Just spitballing. Why? Because you're right. It's better that the money goes into the DAO. Why aren't Arbitrum offering, why aren't people proposing to buy Arbitrum tokens, do you think?
Well, they probably, in Arbitrum's case, they probably don't need any cash. And they also have such a substantial token balance, like on the, in their company, right? Like with all of these projects, they have the equity and then the token. Like that's the thing that investors always talk about. It's like, okay, is the value going to flow to the equity or the token? But normally the equity owns a lot of the token. And so they can just sell it from Arbitrum Foundation, or like, yeah, Optimism, I know, has done this where they do like OTC deals with market makers to sell OP. And then, yeah, so that's their way of doing it.
Can you tell us a bit? So we talked about Futarchy-As-A-Service. We talked about this idea that DAOs can benefit from incorporating these Futarchic primitives to improve governance, which I agree with. I think DAO governance has been an absolute nightmare for 90% of DAOs plus. What about this other thing, Voda.fi? What's the story with that? Where do you see that going?
Yeah. So I guess if the goal is to accelerate Futarchic adoption, there are like a few ways to do that. So you can show how great Futarchy is, and you can get people to adopt Futarchy, and you can also show how bad voting is, and like highlight a major flaw in voting, which is that you can bribe. Like you should not be able to bribe to get decisions through, and yet you can in a voting system. And so you do, like on Ethereum, it's you have like Vodium and Hidden Hand, that are these huge markets. Like I think Vodium did like $50 million in revenue in 2021, um, where people trade their votes for money. I mean, so this didn't really exist on Solana. I think now there's one for Jupiter, but we built it for Saber, and the idea would be that and we built that funded by Saber, UXD, and Soulblaze, because they were like prospective bribers, or I guess vote buyers, whichever term you prefer. Yeah, so that's live. The hope is to generalize that to other markets. So maybe you could imagine people trading their Jupe votes for money, or any DAO votes for money. Yeah, so that, like, right now, I think we're just completely focused on Futarchy-As-A-Service. And so Voda is probably not getting a lot of love, but that's the core idea, is to like showcase a flaw with voting while making a little money in the process.
Interesting. Yeah. So you guys are almost in a way trying to show how bad you built a product to show how bad the thing is for governance. Because when I was perusing the website, I was kind of confused. Like, interesting. So we're almost marketing this idea of trading voting power for money. There's this graphic on the homepage. It's a little ominous looking. Okay, that's super interesting. But yeah, but to your point, it's these days the focus is more on Futarchy-As-A-Service, which yeah, to me that feels like a very logical thing to put all the chips on for the time being.
Right.
Is it not possible to bribe using Futarchy? I was just trying to do it in my head, but I think no, because if they're doing the pass vote, they're having to push up the price, and they're having to put skin in the game, so they're paying a higher price to eventually hopefully receive a bribe, but they may be out of pocket. Go on, you're more clever about this than me.
Yeah, one behavior we did see that was actually pretty interesting in the Ben's proposal was so he would place these high bids and people would sell into his high bids. Like, this is expected behavior from a Futarchy. This is what makes it work. But one interesting thing we saw was that once people had sold to his high bids, so like, I'm just going to make an example. I don't know if these are the right numbers, but like, say the spot was $100 and he placed a bid at $200, and someone sold their meta to him at $200 in the past market. And they know that it's going to be at $100 after the proposal passes. And so they're essentially getting free money because they can buy back, or they can keep some of the cash. Then what would happen is they would then be incentivized for the proposal to pass, because they would have this free money conditional on the proposal passing. And so they would like you would see people stop selling into the high bids. In an efficient market, like, people keep coming in, or not in an efficient market, but just like in a competitive market, people will keep coming in as long as there's an opportunity to be had. But that was an interesting behavior we saw, is that like, once the manipulators can kind of like turn people on the other side of the book to their side by paying these egregious prices.
Yeah, I think that makes sense, that he was just paying way over the odds, and if it passes, then they would have been able to sell at those higher prices. One thing, and while we're sort of slightly on the technical side of it, but I'm still confused, I think, about the fail market, because I think it makes sense on the pass market if you think it's going to be accretive to the net value of the DAO, then you're sort of buying the pseudo meta token in the belief that it will be worth more, and then if that passes, then that purchase has gone through, and and then the new price should be higher. That's sort of my rough understanding, but I don't really understand on the fail market, like who's buying fail Meta and things like that. I think I'm a bit confused on that side still.
Well, anyone who believes the market is mispriced. So if say you believe that Meta will trade at $100 if the proposal fails, and someone is willing to sell their Meta at, I don't know, $80, then you're incentivized to bid to buy from them, because then if it does fail, you'll have like locked in this lower bid, and you can now sell at a higher price if you're correct. Um, and so the reason, like, intuitively, you would just want to do it based on the past price and the spot price. So essentially, like, if this makes number go up, then you do it. The problem is that, like, over time, if a proposal is very likely to pass, then the past price converges to the spot price, right? Because those two should, like, if it's likely to pass, then if conditional on passing is the same as like it. And so that's the reason why you have to have a fail market. I mean, that's essentially what you want to do is just like, what would a MetaDAO be worth if it passed? What would MetaDAO be worth if it failed? And then only do the thing if it would be worth more if it passed. Uh, but yeah, I mean, we haven't seen exactly what type of traders trade in both markets, but I think it's just people who are like trying to make money essentially.
So you guys have had, a few months now of seeing how the real world interacts with MetaDAO. What have been some unforeseen, I guess, challenges or drawbacks of this approach that maybe they're solvable, maybe not, but have come to your attention?
Well, I would say that the one I talked about a minute ago, where like you can kind of buy out people on the other side of the market, is an interesting one that we didn't expect. Uh, but other than that, I think that everything we've seen has been solvable, right? Like liquidity is definitely an issue, but that's an engineering problem. Like you can throw an AMM at that and then incentivize the AMM, and it's sustainable because you get value out of governance. So uh, and there like will be liquidity. So other than that, oh yeah, I mean there has been one issue where like, okay, say a proposal is very likely to pass, right? Like everyone believes the proposal is likely to pass. The pass price is 2x the fail price. Then there's not really a strong incentive to trade in the fail market because those trades are not going to be like finalized, right? Like if I sell my fail meta for fail USDC, it doesn't really matter. Like both of those things are worth zero. And so it doesn't matter. Um, and that doesn't really matter for us right now because the only thing that matters is relative, like whether the pass price, whether it's worth more if it passes or fails. But if you were trying to extract the dollar quantity from like how much value a proposal created, it would be a problem, right? Like if a proposal, uh, you could theoretically say that if a proposal like 2x is the value of Meta, uh, like maybe the valuation in the fail market is 100 million and in the pass market it's 200 million. Uh, like you could say that the proposal creates $100 million worth of value, and you could use that information to like pay out. Like maybe you give $10 million worth of value to the people who created the proposal, for example. But because the fail market becomes nihilistic or like doesn't mean anything in the case where it's unlikely to resolve, then it just becomes it like you can't really do something like that. And so I'm not sure if we'll be able to come up with like a solution to that, but I'm hopeful.
Yeah, I think we touched upon this maybe during the last episode, where if you want more than just a yes or a no, pass or a fail, is that's basically what you're just saying, that it's very tricky to be able to incentivize both sides of the market. Is that basically what you're saying, or can you see a world in which it can evolve and have, I don't know, multiple options, or as you said, maybe depending how much more it is over the fail market, then we'll do X or Y action maybe.
Um, So you can do multiple options. That's not live today, but it's actually pretty simple from an engineering perspective to do that. But you can't, yeah, that is actually an issue with Futarchy, is you can't decide over continuous quantities. So that's like an abstract statement. So specifically, like you couldn't, at least as far as I know, you couldn't use Futarchy to decide someone's salary. Like you could decide, you could use it to decide whether or not to pay them 100K or 200K or $0, like to not hire them. Uh, but I can't think of a way that you could use it uh to like set a salary, where I guess with voting you kind of could, right? Like you could have everyone put in their what they think the person should be paid and then average over those, or some aggregation algorithm. But yeah.
Couldn't you just have loads of options, like $5,000 increments, and then whichever one is the highest would be the salary?
I guess you could. Liquidity would probably be the
Yeah.
issue if you had like, yeah, 5,000 options or something.
And I think the user experience there too, right? If you had, how do you display that? What do like, how are people trading that? What does that look like? I mean, I think you kind of get back to this. I think I've circled back to a proposal probably is best served just like a business makes a proposal, right? Or if you're going to make a decision, you make a decision. You can make a decision on partial information, but you estimate as best as you can to be able to deliver on it. Because if it's not that, then, like, what are you effectively doing? What are you effectively doing?
And maybe that slightly comes into one of the other proposals that I've seen recently, which is about you looking to have a benevolent dictator in charge because maybe it's a bit slow to do things. And we've seen, I suppose, with a lot of the previous DAO governance attempts that you do sort of need this central core really to be putting in the work to propose things. And so is that how you see it? Are you surprised that for the need for a benevolent dictator, or how are you seeing that progressing?
Yeah. So we're Nallok and I are officially appointed today benevolent dictator for 3 months. So we were
Nice.
appointed at the start of April, and I guess end of June would be the end of our term. Um, and the goal is actually to never have to raise that proposal again, and I think it's possible. And I know that that seems untrue, that like maybe will devolve into the other voting systems. But I think Futarchy is different. So like the way you can think about it is that every decision making system has throughput and it has latency, just like a blockchain. Throughput is like how many decisions it can do at once or like in a given month, right? Like how many proposals could you do in a given month? And then latency is how long it takes to make a decision. And in a voting system, you're attention constrained. Like you need the attention of all the people who own your tokens, or at least who have been delegated tokens. You need their attention on all these matters in order for you to come to decisions. And that's kind of an issue. But in a futarchy, futarchy is governed by markets. And in a market, you actually only need one well capitalized actor to set the price correctly. Like you only need one maker to set prices around where they are accurate. And then maybe like one other person to keep them honest, like to trade against them when their prices are wrong. Um, and so I think you can get in throughput and the throughput way up and the latency way down. And so that's our goal during our term. And that's like the AMM, that's improving the time weighted average price oracle, um, and a bunch of like other low level stuff. But I am fairly confident that we won't need to raise another proposal again. That essentially it will be the market in control at the end of June.
How do you guys see MetaDAO playing out now that there's this focus on Futarchy-As-A-Service? Is that kind of the goal, is just to get this experimented on with completely separate organizations and DAOs? Or do you actually see the MetaDAO itself scaling up to be this massive thing where there's tons of liquidity and proposals flowing through? How do you guys kind of envision this in the next few years?
Hmm. Well, I'd say there's the short-term plan, which is, just like getting Futarchy working. But the long-term plan is, MetaDAO originally comes from like DAO of DAOs. And there are essentially, like, the reason why I started MetaDAO, it was actually not just Futarchy. Futarchy was a solution to a problem that I had, which is, say you want to like build a corporation, like a big corporation, right? Because corporations have benefits, right? Like economies of scale, economies of scope. They can, like fixed costs. They can leverage fixed costs across many business units, like a common brand, and regulatory, like capture. They can influence regulations to help themselves. All that is to say, corporations, there's a reason why big companies exist. Um, but startups also have benefits, like autonomy, and they seem to be much more effective at getting stuff done. And they're much less political and bureaucratic. And so, could you build a large organization that's governed as kind of like a series of startups amalgamated into like a single political entity that has these benefits of a big company? And Futarchy, I believe, is the only way you can really do that, because if you don't have Futarchy, then you have all these like incentive traps. So, like, an example of this would be, say you've got a company, like a mega corp that's governed as like a series of startups, and the brand that all these business units share, like, it relies on it being a trusted brand, and that's very helpful to all these business units. And then one business unit wants to launch a product under that brand that's kind of like a degenerate product. I don't know, maybe it's like uh, some sort of, I don't know, maybe it's crypto related. uh, and um, and so, that would be EV plus for that individual business unit, because they could make money and profit off of it. Or if it's potentially EV plus for that business unit, while being EV minus for the organization as a whole, right? Because it hurts the brand and hurts these other business units. And that is like a very important problem. And that is why like why companies are organized the way that they are, under like this empire structure where like everyone reports to a single CEO and a single board of directors. So that like people are at least accountable to the organization as a whole and can't just like maximize their own business unit at the expense of everyone else. And so I think Futarchy, though, is a way that you could actually have these smaller teams, but that are compelled to work for the broader organization because they're accountable to the markets. Um, and I hope that MetaDAO could be such an entity. Uh, and that's definitely the goal. Yeah. Uh, I guess, but short term, we're not really focused on that like broad vision. We're trying to make Futarchy work, but I hope that we can get to a place where MetaDAO is like an important political and economic entity.
Just one other tangent that it'd be maybe interesting to go down, but I think the other interesting concept, which is really coming to the fore this bull market, is prediction markets, which isn't too far removed from what's happening with MetaDAO, but there are crucial differences. So I suppose it's a general. What is your view on prediction markets? Are you a fan? Do you think that could take over? I suppose polling and things like that. And secondly, if we were going to maybe like propose who should be the next president of the United States, like you can have that with either model, presumably. But yeah, I'm just trying to work out in my head what would be the difference in results, and yeah, if you could just enlighten me on that, please.
Sure. Yeah. So prediction markets are kind of interesting because they do showcase what a live futarchy could look like. So they run prediction markets on who's going to win the election. And they also run prediction markets on who is going to win the party nomination. And what's interesting is that, at least at the time I looked at the prediction market, uh, if you looked at it, I believe at the time, Joe Biden had like an 80% chance of winning the Democratic nominee, and then a 40% chance of winning the overall election. And so essentially, the market is saying that if he wins the Democratic nominee, there's a 50% chance that he will win the overall election, which sounds about right to me. And then Michelle Obama, on the other hand, she had, I think, a 10% chance of winning the Democratic nomination, and then an 80%, or sorry, an 8% chance, or something in that order of magnitude, of winning the overall election. So essentially, the market was saying that Michelle Obama would have an 80% chance of winning if he were nominated as the Democratic, like the person who runs for president.
Nominee.
What is that called?
Democratic nominee.
Yeah, nominee. And so if the Democratic Party, obviously, I don't know if Michelle Obama wants to run for president, but just if you assume that she does, then the Democratic Party would almost double their odds of winning, at least according to the market, if they were following futarchy. And so, yeah, I think prediction markets are kind of like one showcase of this. And obviously, prediction markets for presidential candidates have been way better than pollsters at predicting who's going to win. But then back to your other question of like, how would this actually look? Like, if you wanted to have a futarchy elect a president, what would it look like? So obviously, governments don't have stocks, right? Like, there's no U.S. stock. I guess there's the S&P 500, but we probably don't want to just do things that make number go up with a country. Like, maybe we want to also increase the happiness of our citizens, and things like that. And so the way that you could do it, or would do it, is you create financial contracts that pay out relative to these other things that you want to have happen. So, like, if you want to increase say you, Dave, want to increase satisfaction of Davistan. That's like your objective function. You want all your residents of Davistan to be very happy and satisfied all the time. What you could do is you could run instead of having people vote every year, you have them fill out a survey every year where they say, like, how satisfied am I with my life? Or like, how happy was I this year? And maybe they can put in a number from 0 to 5. And then you create financial contracts that pay out relative to what they put in. So say if the citizens of Davistan are on average 4 out of 5 happy in 2024, then your contracts pay out $4. Or if they're 1.5 happy, then they only pay out $1.50. And then because you now have you've now put a price on satisfaction, in effect, you can use a futarchy where people bid on those contracts, and you just do whatever will increase the price of those contracts the most. So if Joe Biden, if the contracts are, I don't know, trading at like $3 in Joe Biden's case, and I don't know, $4 in Trump's case, then essentially the market is saying that people will be 1 point happier in Davistan if Trump is elected. I know, sorry, I'm mixing US and Davistan now, but you get the point. You create financial contracts that pay out relative to these things, to these like other, I guess, softer, like non just stock price. And then, yeah, you can run Futarchy on that. You can also run it on, this is what Robin has talked about, like you can do it based on citizenship. So if you allow people to trade their citizenships freely, which I don't know of any government that does do this, you could try to maximize the value of your citizenship. So whatever makes like the price of your citizenship go up is what you do.
It's fascinating. Never thought about that. So we covered a lot of topics today. I think a closing question from me is, where have you guys found PMF with other DAOs who are looking to add more of these futarchic primitives? What has been, I guess, the most pressing, I don't know, issue with governance that other DAOs or even just like even a type of product has resonated the most with what you guys have already been building?
I think obviously the solution for attention, right? You don't have these issues with quorum. Now there comes a time that you have to have the handing over of authority to these systems, which may be uncomfortable for a lot of DAOs, and a lot of DAOs haven't done that with systems they've built with Aragon, I think. So I think first is you solve an attention problem for quorum and activity with your governance token, which in turn creates value for your governance token if you can do that. I think the interesting aspect of focus on the proposal, like having a value adding proposal, means that you've kind of constrained what you need to be able to produce there. It can't be some arbitrary decision making. It's got to be something that raises the bar. And I think that that's been quite interesting with respect to that. Obviously, a hot governance token will not necessarily mandate the requirement of something like this. But if you have something that is stagnant or you are struggling to get those thresholds met, this is a natural solution to still be able to use DAO governance without that restriction or without having to create insiders or any groups like that.
Yeah. And so, I mean, I think Nallok touched on a core one, which is attention. Like people want to solve this attention problem where like they don't have to keep riling up the troops every time you create a governance proposal, which is like totally reasonable. And then I think the other one is just quality of decision making, right? Like Jupiter DAO is probably the hottest DAO in all of crypto right now, possibly of all time in terms of engagement. And yet recently it passed a DAO vote that would allow Sharky to launch with 1% float. Like obviously a horrible like predatory system that's going to make Jupiter eventually look bad. And so, yeah, I think it's just like seeing time and time again, the quality of decisions of voting be bad. This could like solve an issue for them.
Awesome. Well, guys, this has been a super fun conversation. Really impressed with just the traction that MetaDAO has gotten, the attention it's gotten, and super excited for what's to come, and all the products that you guys are continuing to build, all the DAOs that you're continuing to influence here. So Prophet and Metanallok, thank you so much for joining us today.
Thank you.
Yeah. Thank you so much for having us on.